Tech is bouncing back today after we saw that big rotation into value. And one of my next guests says last week moves were typical for the start of a new bull market and sees small cap outperformance ahead. Joining me now is Nancy Pryles, Senior Portfolio Manager at Essex Investment Management. And Brian Levitt is here with me. He's Global Market Strategist at Invesco. Welcome to both of you. Nancy, I think that's you talking the happy talk about small caps in the market. Is that right? Some people think now it's over. It's over, but you're sticking with it.
Absolutely not. I mean, remember, we are coming off one of the most dramatic small cap underperformance cycles that we've had. In fact, it's the second worst period of underperformance since 1926, one of the largest in relative underperformance. This rubber band was stretched incredibly tight with the move into mega caps and away from small caps. So even though the moves have been very dramatic, and we would not be surprised to see it pause a little bit here, we think that the combination of under ownership, low valuations, and better earnings growth coming will lead to what could be a very, very robust small cap cycle.
Brian?
I like the comment on the pause, and here's why. So we look at our tactical indicators, which is rolling over a bit. Growth is clearly slowing globally, led by some slowdown in the U.S. So that's typically not a prime spot for small caps. Now, the market got a little ahead of itself with expectations for rate cuts, so you get a small cap pop, which was great. In the near term, I would say I agree. It's more of a quality mega cap type of world as the U.S. economy moderates. But we have to remember we're peak inflation, peak rates, peak tightening. We will see the yield curve normalize. And over the next few years, I agree, small caps should do well in that type of an environment.
I feel like you're stretching to agree. I feel like you really disagree.
No, I'm not stretching to agree because I really do believe the normalization of the yield. Because small caps need a catalyst. Value needs a catalyst. And so right now, you're not going to see growth go to a new level. Right. And so that catalyst doesn't exist. Instead, what you need is we need to come through the economic soft patch and then be convinced that the Fed can normalize the yield curve without a recession.
So, in other words, the reacceleration after that slowdown. Nancy, what do you think?
Well, I agree that we need a catalyst. We think we've had that catalyst with the most recent inflation print, that was, if you'll use the analogy with inertia and a body in motion, staying in motion, that was the change in force that caused this shift in where the market is going. We also think that the Fed will be able to engineer a soft landing. So I don't disagree that we're seeing some slower economic growth here. We think we are poised to see that begin to reaccelerate, not necessarily this quarter or next quarter, but over the next couple of quarters as these lower rates take hold, as the lower inflation takes hold, and very importantly, as the fundamental forces of reshoring of manufacturing, building out the power grid, the development of AI, et cetera, really continue to drive the U.S. domestic economy.
Brian?
Yeah, I agree completely. And so, this idea of a soft patch where, investors may need to be a little bit defensive here, I agree with it. But it's not the time to be bearish for markets over the intermediate term period. I mean, investors are sitting here, they're looking at 80, 81, they're looking at 94, 95, right? Because that's the hard landing example, that's the soft landing example. It didn't really matter. 80, 81, you did have a recession. You were thrilled if you invested when inflation had peaked or the Fed was done tightening. 94, 95, you didn't have a recession. You were still thrilled if you had invested when inflation had peaked or the Fed was done tightening or it had backed off of its tightening stance. So to me, I know we're spending so much time talking about politics right now and the focus of Kamala Harris versus Donald Trump. To me, it's about the direction of the economy and what the Federal Reserve is going to do. Economy's slowing a bit here, but the Fed will respond. So, it's going to be a good backdrop for equities over the next few years, in my opinion, and it should broaden out as we get through this soft patch.
And Nancy, just quick last word. Would there be a couple of names in particular that you think can shine?
There would be, and I will touch on that, but I would like to make one other comment, which is that it's really, we think, important to remember in small cap investing that it is a part of the market where you do not actually want to be a passive investor. Stock picking matters in small caps, and so finding companies with tailwinds, with earnings growth that can outgrow is most important in that context. We are particularly excited about companies in the industrial areas. One of the areas we really like is the PFAS remediation, forever chemicals. That's a part of environmental clean air, environmental spending that is bipartisan. Everybody wants clean water. And so Clean Harbors and Montrose are both plays on that. We also really like healthcare here as a place that has lagged.